I have to say, though, for seasoned investors, right, folks who've been around, they understand this could be a problem. It's just too closely associated, the market is, this rally with one stock. And now check this out. The enterprise value, almost 12% of GDP. At its peak, Cisco was 5.5%. Is this a bad sign? Could things be different this time? Well, let's ask. We have Main Street Asset Management, LLC, Chief Investment Officer Erin Gibbs, along with Belpointe Chief Strategist David Nelson. Erin, are you afraid? Are you nervous? Or is this time different because NVIDIA is such a unique company?
Well, I'm always nervous when there's concentration. I don't like where there's such little breadth that we're not seeing broad participation across the stock market. So I think NVIDIA, it's a great story, but I'm certainly concerned that we're not seeing that spread into other companies, and that's the real
We
worry.
are getting a little traction today when NVIDIA is sort of struggling here a little bit. I do find also that in the last few days, a lot more targets, right? I think Morgan Stanley went to 144 yesterday, and that kind of got it over the finish line. It does look weaker than it has, and the market's not falling apart.
The chart on NVIDIA looks very much like it did last quarter. It started to get weak, and then suddenly, you know, the earnings came out and it was off to the races again. But there are other stories out there that are working. But obviously the concentration, it's not just NVIDIA, it's this handful of stocks,
right,
for good reason, are where all the earnings are.
Yeah, but to your point, I mean, the stocks that are working, right now the market's on track for the lowest percentage of stocks beating the S&P ever. And again, Aaron, I'll say, you know, listen, it can't always be this way. So on one hand, it looks like you've got a lot of opportunity in there. On the other hand, it's like, how do you pick? Because if they're all underperforming, why? What changes that?
Right. And what's interesting as well is we're actually seeing going into Q2, sort of the preseason revisions before all the earnings reports come out. We've actually seen about a 15% bump. So revisions up. So profit expectations have been revised about 15% higher. So we're looking at a broad economy doing pretty well.
I can't find those stocks. I'm
not there.
Well, the problem is the prices aren't following the earnings. So we're getting higher earnings, but the prices are still staying low. And so I think until we start seeing a real trend in shift in rotation and leadership, and it's just not there yet. And so I'm not saying go do it right now because I really want to see that rotation. But when that happens, be ready for it.
But David, I mean, I'm really going through stock by stock, and I'm looking at, you know, like the full year earnings, next year's earnings. Most of them are flat or trending lower. I don't see where there's this huge, massive. I know that's what consensus is, but I just can't find it on an individual level.
The market is desperately looking for leadership outside of technology, and it can't find it for good reason. And you can point to the Federal Reserve. A lot of companies, you know, you look at Apple, Microsoft, NVIDIA, Alphabet, they can self-fund their working capital.
Sure.
Every other company needs access to credit, and it's not cheap. And as long as the Federal Reserve has their throne on the economy, it's going to be very difficult for these other asset class, small and mid caps to perform.
But there are good companies out there that, you know,
within the carnage, yes.
Yeah. I mean, you know, it's like, there was a time when this was the regular interest rate. There was a time when this was a normal set of circumstances, and the market did well.
Not
this time. So Jay Powell spoke today. You know, he was real smooth with his colleagues. He dodged the question on what would be worse, but being too early or being too late with respect to rate cuts. What do you think?
I think being too early. I think we still have to worry about inflation. I think there are a lot of signs that we're not out of the woods just yet.
I'm on the other side of that.
Yeah. Well.
I'm totally on the other side of that. They're going to be late. And what they need to do, they need to cut rates to end inflation. And the reason is we have a housing cycle. And if you look at the last CPI report, it was shelter inflation that was the problem. You're not going to solve that until you clear out the inventory. Nobody can sell their home. You can't move from a 3% mortgage to a 7% mortgage.
All right, let's talk about some ways to make money. Erin, you like the electricity demand story.
Yeah, I think it's really interesting when we're looking at projected consumption. We're actually expecting about a 20% growth over the next 5 years. That's really unusual because we've actually, for the past 15 years, our consumption, not your bill, but your actual electricity use has been flat for like 15 years because we're shifting to more efficient.
We're showing those charts, but the question is, because we've seen utilities pop on this thesis and then kind of come down hard quickly. Yeah. Do you buy and hold these for that 5-year run?
I'm not focusing so much on the utilities. I'm saying more of the diversified energy stocks, because whether that electricity is coming from your fossil fuels or solar, they have that exposure. And that's where I think the first pop is going to be versus the utility companies just yet.
Okay, I mean,
I think that's a great call. I think that'll work out well.
But I also think the solar names need a re-election of Biden, maybe. I mean, Enphase, First Solar. First Solar got an upgrade last week, a huge upgrade, like a 50-point upgrade, and the stock was hammered after that debate. 30 seconds, David. What are you buying?
I bought a new one, Ulta.
Really?
Yeah, and this is for all the husbands and boyfriends out there that have to.
I thought you would have got something for the beard. No?
Nah, they drag it to the store. You see these little bottles of goop for $150 or a vial of a magic powder for $85. You realize this is a very profitable business.
Yeah.
This is a fallen angel. This used to be a gross company. There's 1.7 million shares short. I just think this company's made turn the corner.
You know, I like that idea. I took my granddaughter, my 11-year-old granddaughter, to Sephora for the first time. It was a madhouse.
That's the
problem. And by the way, Elf is through the roof. I mean, I wouldn't tell anyone to chase it right here. All right, well, it's great having both of you. So much brain power here. Have a great 4th of July.
Thank you.
All right, folks.
You too.